The global financial system just got a shock that could hit your wallet. This is Kenya News Update today. Coming up, you'll discover how a single threat from the White House sent markets into a tailspin and why a fight over a frozen island could make everything you buy more expensive. The yield on the 30-year U.S. Treasury just spiked. That's a flashing red signal for the global economy. But here's the twist. This isn't about inflation or interest rates. This is about a new trade war, and it started with a demand to buy Greenland. Meet the bond traders on the floor of the New York Stock Exchange. Their screens lit up red on Tuesday. The bond market was closed Monday for Martin Luther King Jr. Day, so all the pent-up fear hit at once. For them, a basis point is a heartbeat. And the heartbeat just skipped. The yield on the benchmark 10-year Treasury jumped more than 6 basis points to 4.295%. But here's what nobody's talking about. The longer-dated bonds screamed even louder. The 20-year yield spiked 8 basis points to 4.878%, and the 30-year yield rocketed 8 basis points to 4.92%. Remember, yields and prices move in opposite directions, so this is a massive sell-off. And then, something shocking happened. The US dollar index itself fell almost 1%. Investors weren't just fleeing bonds, they were fleeing US assets entirely. The trigger? President Donald Trump. On Saturday, he announced that 8 European allies would face escalating tariffs, starting at 10% on February 1 and rising to 25% on June 1 if a deal isn't reached. The deal, allowing Washington to buy Greenland, a semi-autonomous Danish territory. The targets: Denmark, Norway, Sweden, France, Germany, the UK, the Netherlands, and Finland. But the escalation didn't stop there. On Tuesday, Trump threatened to impose 200% tariffs on French wine and champagne. This came after France's President Emmanuel Macron was reportedly unwilling to join Trump's Board of Peace on Gaza. European leaders have called these threats unacceptable. France is now pushing the EU to use its strongest economic counter-threat, the anti-coercion instrument. This is a diplomatic earthquake. And here's the part that will blow your mind. Trump also lashed out at the UK over its decision to transfer sovereignty of the Chagos Islands to Mauritius. Those islands include Diego Garcia, home to a critical joint US-UK military base. The Trump administration previously backed the UK's deal. This is a sudden, sharp turn against allies. Meanwhile, turmoil in Japanese bonds sent yields soaring as traders reacted to Prime Minister Sani Takaichi's decision to call a snap election for February 8. That global ripple effect added fuel to the fire. Investors worldwide are now demanding a higher return for the growing risk. The implications are massive for Kenya and the world. A full-blown US-Europe trade war means higher prices on imported goods, from machinery to electronics. It means more volatility for the Kenyan shilling against a weakening dollar. And it means global capital is getting nervous, looking for safer havens. Some say this is tough negotiation. Others say it's economic coercion that will backfire. But here's the unanswered question. Is this a bluff to get a deal, or the first shot in a new economic Cold War? The bond market, the so-called smart money, is betting on the latter. They're voting with their dollars and they're selling. Do you think these tariff threats are a smart negotiating tactic or a dangerous gamble that will hurt the global economy? Drop your take in the comments. Subscribe to Kenya News Update today for more breaking news on how global events impact your life right here.